Often, beginning traders cannot understand why the markets and price action aren't moving the way they were, say, a month ago, and they keep getting stopped out. The average true range can offer a huge clue as to why and what to expect day by day. But first, let's take a look at the volume feature on your MT4 charts. You can make this a regular component on every chart by right-clicking and selecting Properties, then Common, select Show Volumes, click OK. We can now see an array of green bars along the bottom of this pound-yen chart. Another way to see volume is to select the indicator called Volume, which appears in a separate window below the price chart. The main distinction here is that we have alternating red and green bars which indicate volume bars, which are either higher or lower than the ones before. Just to clarify, with Forex currency pairs, these volume bars do not indicate real market volume. They indicate the number of price changes during each period of that chart's time frame. Volumes on metals, equities, and indices are based on actual contracts. Often, declining volumes can signify larger moves on the horizon, which can also be beneficial when trading chart patterns. We can clearly see declining volumes during this pennant on pound-yen, and as predicted, it left the pennant in the same way it came in and volumes increased. The average true range is not an indicator that you need to monitor every day, but once every week or two would be a good idea. Let's take a look at one to see why. Open your indicators list and under Oscillators select Average True Range. The default is 14, so when used on the daily chart, it looks back at the previous 14 days. ATR is a moving average of the differences between the highs and lows of each period. For our purposes, this period will be 1 day, and we will only use these on the daily charts. If we look at Euro-Pound, which usually has a low ATR anyway, we can see that today's level is 55 pips. Earlier in the year, the ATR was almost double. If we look at last year, we can see that Euro-Pound peaked at 96 pips and steadily dropped to 47 pips, or roughly half that. This may not seem important, but if you are a new trader who has finally discovered a successful method or strategy, which for reasons unknown has stopped working, ATR might be the first place to look. However, like every lagging indicator, it may be fooled by spikes that throw off the 14-day average. For example, this blip here was the UK Brexit referendum, and this one was caused by the US elections. Of course, 14 days after the fact, they both returned to normal. Let's look at a pair that traditionally has a higher ATR. Today's reading on pound-yen is relatively low at 114 pips. That doesn't mean it is better to trade than Euro-Pound at 55 pips. These are relative terms in that with more price movement, you still have to adjust your risk management, which we will explain in our education series. Again, if we eliminate the Brexit and US elections, we can see that pound-yen is usually more volatile, with readings here of 209 pips, 221 pips, and over 250 pips compared to the recent double-digit readings. Monitoring ATR and volume may not be something you want to do in your first few days of MT4, but you may want to refer back once in a while to see what the markets are doing in relative terms. To review, in this lesson we covered reading volumes on MT4 and using average true range, ATR, to gauge market activity. In our next lesson, we will look at using graphics on your MT4 charts.